Well, let's take this IT conversation forward then. Apurva Prasad, Research Analyst of the IT sector at HDFC Securities is with us. Apurva, so you tell us, yes, the numbers are good, the commentary is stupendous, but I think the only question on everyone's mind is, if I buy now, will I get burned? Should I buy lower? How much lower? You tell us.
Yeah, so I think you can certainly buy now. I mean, let's look at what's changed. The fact that you have such major industry tailwinds with tech budgets, which are clearly getting a lot more priority over other budgets by enterprises. Timeline shrinkage of transformation to core IT systems that's gone down by half. What does all this translate into? If you see the next 2 years, incremental absolute growth is actually going to be higher than what you added incrementally in the last 4 years. That's the kind of acceleration that we're talking about. And this is just phase one. So as you go beyond, there is a much higher sort of certainty factor of a decent level of growth rate, which is what adds on to the entire thing. So I think we had written about this a couple of months back. What we really put out the fact that the implied growth rate, even 2 months back, was just about 5.5% CAGR, dollar terms revenue growth for the 10 years. So that was very clearly mispriced. And I think even now, even after this kind of a rally, I think there is still a good upside remaining from a 1 to 2 year perspective, despite the 20-25% outperformance versus Nifty. So I'm fairly positive. I think some of the industry tailwinds are very, very strong, and those are things which will manifest over a multi-year period, and it will go across tier 1 as well as tier 2, and that's something which we are also finding companies talking about.
Apurva, good afternoon. So what kind of valuation multiple, for example, would you give to a TCS or a Wipro?
Good afternoon. So TCS we are ascribing now 27 times, so that's clearly 2 standard deviations above where they are. But if you're looking at the context, FY 21 to 23, you're looking at a 16.5% type of an earnings CAGR. Now, these are companies which were growing at high single-digit type of an earnings CAGR. So for a mid to slightly over mid-teens kind of an earnings growth rate over the next 2 years, with businesses generating 45 to 50% type of an ROIC, and you look at the kind of free cash that they've been generating the last 2 quarters, despite the major global headwinds in terms of how they've brought down their DSOs to their lowest ever level. I think from the operational side, some of these aspects are commendable, and this holds true even for some of the other larger peers in the last quarter too. So I think the operational flexibility that a lot of companies get, coupled with the fact that you're looking at a decent growth acceleration, valuations can certainly be elevated. So, I mean, most of my target valuations are anywhere between 1 to 2 standard deviation. I think those are sustainable. So for TCS, we are giving highest about 27 times or so. Wipro, we are still slightly at about 16, 17 times. That's really where we are on our target multiples.
Okay. Apurva, so then my next question is, since this is a big opportunity for the big boys themselves, as you described, is one better off being with the large cap names, or should you look for the mid cap players? Because, I'm also reading up on a lot of positive commentary around companies like L&T Infotech, for instance.
So, Surabhi, I think it's a wide array of buffet. I think there are great opportunities in the mid-tier, especially if you look at the scalability of many of these mid-tiers. So essentially, $1.5 billion companies, there is great scalability in many of these companies. And we expect a lot of these companies to start growing at a premium to even tier 1s, which is also at an accelerated pace. So be it some of the advantages on the BFSI, which is accruing to some of the mid-tier names like an L&T Infotech or an Emphasis, or the more structural changes in the business and in companies persistent. I think these are some very interesting stocks with very reasonable upsides from where they are today.
Okay, Apurva, thanks a lot for your time today. Good talking to you. That's the view from HDFC Securities. Let's invite our